Hello, welcome to the 1010 Book Club. As you know, the stock market are very unpredictable. However, there's one thing, it's the fundamental. Fundamental wouldn't change. If this is your first time here at the 1010 Book Club, so my name is Billy Chan. Today, we are very grateful that we have Peter Lim together with us. Peter Lim is going to share his book, What I Learned About the Semicon and EMS. So, Peter Lim is an analyst and fund manager itself, and he is the Chief Research Officer in Trident Analytics Sdn Bhd based in Malaysia. Today, he is going to share it from the global perspective of the Semicon and bring it back to how it relates to the Malaysia Semicon industry. I believe that you're going to get a very interesting insight of how Semicon industry works and how it's able to relate back to your investment strategy. Alright, enjoy the sharing!
Thanks for joining. Okay, as mentioned, today I'm going to talk about the most recent book, What I Learned About Semicon and EMS. Basically, the whole book is what you see on the screen, the whole ecosystem. Actually, the motivation behind this book is, I deal with investors a lot, and very common, investors conveniently lump everything together as technology. Right? So it reached a stage I got a bit, not irritated, but a bit, okay, I used the word irritated, right? So that I decided, we better set things right. That I think investors need to understand the whole market segmentation rather than just lump everything into semicon and technology. So this is the basis of why this book was being created. And this is actually the whole end result of the book is explaining what this whole value chain is about, which in this presentation I tried to summarize it in that sense, but long and short, the whole book is about this ecosystem. First, of course, before we go on the book, okay. Oh, it's working.
Okay, no, sorry, the thing is, I need to control, so you go to the next.
Oh no, it's moving, right?
So this one need to.
No, it's moving.
Yeah. So that one is not connected.
Sorry. Sorry, no wonder. Okay. So first, you guys know tech better than me. So when Billy first invited me, I said, you got to be kidding me, right? I mean, you come to Intel talk about semicon. That's the worst place to talk about semicon. I'm not an engineer, I'm an accountant by training. But generally, because to give a feedback, this book is aimed for laymen, right? So to get a perspective, of course, there are many ways to categorize semicon or some type of semiconductors, but this is generally what we use from the layman perspective. So of course, there is a DSP sensor per se. So this one actually reflects the sales value on 2020. At the point when I wrote this book, this 2020, of course, as we are talking now, there's 2021 data available. But what's important is if you look at it, the biggest chunk of sales by value is actually memory chips and logic chips. Right? And if you look at between 2021 and 2020, all these sectors generally, except for one, grew by 30% from 2020 to 2021. The only segment that grew 7% during this period was actually the opto, which is actually the LEDs. Right? But long and short, for the last surge in demand for semiconductors and total is across the board. Okay. What we talk about next is, of course, which. Press. Press here. Sorry. It's actually where does all this semicon goes to? Again, this is measured by sales value. So if you talk about it, technically 32% of semicons, again, I must stress, is measured by value goes to personal computers. Another 31% goes to communication, means your handheld devices. 12% goes to industrial. 12% goes to consumer, which is generally your white goods. Automotive 11%, and government is actually the balance 1%. Now, which is interesting, whenever you hear about where are the demand for semicon are, and we always hear automotive is where the demand is. But when you look at it, then you start to wonder, why is it only 11%? Right? Okay, again, this is measured by sales value. What's interesting is this. Okay. Automotive does not need the smallest chip. That's the reality of it. If you think about it, right, pricing of chips grows as it goes smaller and smaller, right? This is one thing that is very unique. Although automotive industry demands a lot of chips and semicons, but they don't require the smallest chips in the market, simply because there's a lot of space behind your dashboard. So automotive, they are able to, or they can accept chips in bigger sizes because they don't need small scale. And because they don't need the smaller scale, they can accept bigger sizes chips. The value are actually lower than the smaller scale. So that's why it's interesting to say automotive is only 11%, but again, based on sales value. Again, simply because the chips they use, it's not that it's not advanced. They are advanced chips, but just that they need not be in a very, very small size to fit into a limited space. Next. Okay. Next, we talk about the key players. Again, a very interesting perspective we put in the book is that we always hear how big China is. Right? How big China market, especially with all these CHIPS Act in the US, everybody is zooming into China, all trade barriers. But I think one interesting point people didn't put into consideration. Yes, China consumes and also produces a lot of semicons. But what is interesting is if you take a step further to analyze which are the companies that consume these semiconductors. If you trace it back by parent company, by parentage, what is interesting, you look at it. At every market, look at Japan market, for instance. Japan market, technically 39.5% of the demand actually comes from US-based companies. Whereas the balance 60% comes from the rest of the world, or down line. Europe is 49%, America is 41%. And look at China. Actually, 50% of the demand or the sales of semicon in China actually goes to US-based companies. If you split these numbers further, if you look at what is the demand of actual Chinese, China, I call it Chinese China or Chinese companies, it's only 19%. So what I'm trying to say is, yes, China is consuming a lot of semiconductors, but the reality is this 50% of all these sales are actually US-based firms. So now this is an important perspective. And this is exactly where the tricky part is. On one hand, you have the US trying to control the level of technology that China, to be used in China. But yet, on the other hand, the biggest buyers of these chips are US companies. So it is a very tricky situation in the US now. Right. Oh, sorry, next. Okay. Again, I mean, I'm not a semicon engineer. So some of this, basically what is the whole process that it goes through in manufacturing of chips or semicon. The utmost is system integrated or circuit design, or we call it IC design. And when it comes down to the what we call as front-end production. Okay, front-end production, basically there are two parts of it. One is called wafer fabrication, and one is called wafer probing. Right? This is technically to manufacture chips. Then the back-end part, we call it assembly and packaging, which is to package the chips into ICs, and also the testing. And then when you take all these semiconductors plus with non-IC component, you integrate together, you become a printed circuit board or PCB, which I'll go into more detail later. And in the end, all this will actually go to end consumer device. Oh, yes, yes. Sorry. Okay, right. Okay. So let's run through a value chain, a very quick summary of it. Okay, everything actually starts with the product owner. Okay, in this case, let's take an example, right? Take Apple as the product owner. So everything is driven by what we call as the product owner. So in the consumer space, we can say it's either be Apple, or we can say it can be Dyson, right? Or it can be your Daikin aircon, it can be your fridge, it can be your Samsung, it can be anything. So the product owner is actually the driver behind all these things. Okay, now, say for instance, Apple, for instance, when they want to create a new next generation iPhone, they will have a specification in mind. How much speed they expect from the processors, how much megapixel they expect from the lenses, etc., etc. Their wireless data, how much speed they expect from wireless data. So when they already set the parameter, they already work with the first player, we call that the IC design house. So this IC design house will then create chips that meet the specification of the end users. Okay, now in IC design house, there are again two categories. One we call it fabless, and one we call it, sorry, the next. And one is IDM, or integrated design manufacturers. Okay, let's take Intel, for instance, right? Intel actually belongs to the category of IDM, integrated design manufacturers. What simply means is when chips first started, Semicon first started, talk about in the early 1940s, 50s, 60s, right? All these companies like Texas Instruments, Intel, they started not only they design chip, they also manufacture the chips themselves. So these companies who manufacture and design chips themselves, we call them IDM. And Intel is by right, technically, it is the world's largest IDM. As the years goes by, as you know, this manufacturing chip is very capital intensive. So then came a new generation of chip designers who say, well, I want to design chips only. I'm not going to get involved in manufacturing. Right. So then created this new category called fabless. The word fab actually comes from the word fabrication. It means they don't fabricate the chips. That's why we call them fabless. So the new guys, there's people like for instance, your NVIDIAs, your Qualcomm, your Broadcom. So these fellas are purely fabless. So they only design. Okay, now, and because when you created a new category of fabless, somebody have to do the manufacturing or the fabrication of chips. Next. And therefore, we have, okay, before I move that, these are the categories of between the fabless and also the IDM. The reason why I choose to separate both is, if you try to Google the world's largest semiconductors, for instance, you find there will be a long list of companies, right, and which is measured by revenue. But what I don't quite agree with that classification is they basically lump everybody together, regardless of whether you are a fab, you are a fabless, or you are even you're a OSAT, or even your foundry. So they just lump together based on the revenue they generate, which I don't quite agree. So what I did in the book is I actually split it according to where they're supposed to belong. So if you look at table 3, these are companies which are in the fabless based on their revenue and their country of origin. You have Qualcomm, which is 33 billion revenue, Broadcom, NVIDIA, MediaTek, and AMD. Table 4 are the IDMs, the integrated manufacturers, and you have people like Samsung Electronics, Intel, SK Hynix, Micron, etc., etc. So that's why if you look at it on perspective, you start to realize actually they are not the same, because their business model is very, very different. Fabless are very lean, they don't have much capex because they don't do manufacturing. Whereas IDM, they have capex sitting in their balance sheet. So when the industry turns, you know that the IDM will be hit much more severe than the fabless because of the fixed costs that they carry. Next. Okay. Next, that will be okay. Oh, okay. I mentioned next will be the foundry and the OSAT. Oh, and then press sorry. Okay, foundry and OSAT. As mentioned, because fabless decided they are not going to manufacture, then somebody will have to do the manufacturing job. So that's where foundries and OSAT came about. Now, what's the difference between foundries and OSAT? Actually, it's very different. Okay, you mentioned earlier, you look at how semiconductors are made. You start by a wafer, a pure silicon, and then from the pure silicon, you have to use lithography technology to actually imprint layers and layers of circuits on the silicon wafer to create circuits on the wafer. So that process of creating lithography on the wafer is called a foundry. So a foundry basically fabricates wafer. So we call that foundry, right? And the world's largest foundry is actually TSMC. Okay. OSATs are different. After you get the wafer, basically you have to cut the wafer into individual chips. And these individual chips are it's working unit, but it's very fragile. Any contamination can just fall. So all these chips need to be protected by a package. So that's why you call them OSAT. So OSAT are the guys who actually package the chips or create a packaging layer to protect the chips. That's why we usually don't call these fellas as manufacturing of semiconductors. That's why you usually call it packaging, because it is a packaging process. So OSAT are the guys who package semiconductors, whereas foundries are the one who actually fabricate the wafer. So it's too bad. Say TSMC, for instance, right? Commonly we hear a lot of press saying that TSMC is the world's largest OSAT. It's actually not true. TSMC is the world's largest foundry, but they are actually the world's 4th largest OSAT. So TSMC is big in foundry, wafer fabrication, but they are not big in packaging. The world's largest packaging actually belongs to China. It's actually Chinese companies. So if you look at the next slide, that's it. On the table 5, you have foundries, right? And whereas on table 8, you have the OSAT. So again, it is something that is quite conveniently lumped together in the media, but you really get, they are actually quite different. As I mentioned, OSAT big players are people like ASE from Taiwan, Amkor Korea, JSET from China, etc. And you notice I deliberately created a column by country, so to let you see the concentration of where the businesses are focused on. So if you look at, in terms of Foundry, they are mainly in Taiwan, and if you look at OSAT, it's actually mainly in Taiwan and China. Go on to the next. Okay. So we have gone through IC design, we have gone through OSAT. The next we call them outsourced burn-in service providers. Okay. Usually chips will go through testing. So testing, we call them functional tests to make sure that whether the chip works or not. But there's another test, we call them burn-in tests. Burn-in test, we call it, is to stress the chip under severe heat and working condition. We call it an early mortality test to make sure that the chips that are produced, they've already functioned. Yes, you already did that on the functional test. But burn-in test is to weed out those chips that cannot survive in the long run. So what they did was, or what they will do in the burn-in test is they subject all these chips to extreme temperature and working conditions. And those chips failed during the process will be eliminated, and those chips that survive will then be delivered to end customers. Okay. And next, you have materials and services. So these are the companies who actually provide services to the OSAT, to the manufacturing. Like for instance, silicons, they provide silicons, they provide gallium nitride, all these materials which are being used in the production. Next will be, next. Okay, now, next, supporting the OSAT are actually, we call them the equipment players. Okay, now this is actually one of the big segment, especially in Malaysia, right? We always see all these equipment players in around this neighborhood. We got a lot of equipment players, but then again, equipment is a very big category. Again, I split the equipment into 3 categories. Okay, the first category we call it the IC fabrication equipment. Okay, what this means is, in the process of the foundry, you need a machine to fabricate the wafer, right? So those are foundry level equipment. In the OSAT, you need equipment to package the chips. So those are the equipment that are used in packaging process or the OSAT process. So this one, I call them IC fabrication equipments. Okay, now, if you look at IC fabrication equipment, it's a very high level barrier of entry. And not to say that, okay, not even Malaysia, we are not there. A lot of places or a lot of countries in the world are also not there. This is a very high technological level and it's high barrier of entry. So look at who are in that space. The companies like, oh, I press. Let me, is it? Press. Sorry. Okay, table 15 is wafer front-end equipment players. Meaning to say, as I mentioned, these are the equipment that is used to fabricate wafers. And look at it. The world largest applied materials from the US. Second is ASML from Netherlands, Tokyo Electron from Japan, Lam Research US, KLA US, and Screen Holdings Japan. And basically, these are the players that are there. So among the whole semicon value chain, other than the IC design, actually a lot of the technological know-how is actually very concentrated at this space. And the barrier is very, very high. As you can notice, you don't even see, other than Netherlands, you don't really see any other Europe companies inside here. Neither are there any Koreans, not to mention Taiwan or even China. Then table 16, it shows test and equipment players. Okay, these are more on the OSAT equipments. And you have big players like your Keysight, for instance, your Advantest, your Teradyne, your NI, your Kohu, your Form Factor, and your AM. The closest in the ASEAN region is AM. That's the only guy who are in this space. And these are the guys who actually create the machines that are being used in packaging of semicon. Again, although not as technological high barrier as the foundry equipment, but this is also very, very high level. And again, if you notice, the country is concentrated in the US, not even Taiwan and not even South Korea. So that's the first category of equipment. The second category of equipment is the test and inspection equipment. Right. So this is where a lot of our Malaysian players operates at this space. Right. So most of our players are actually at the completed chips. When the chips IC has been completed, packaged, and they need to be tested. So most of our Malaysian test equipment companies actually operated at this area. Oops, sorry, I pressed too fast. Next is the burn-in equipment. Oh, sorry, too fast. Sorry. Thank you. Okay. This again are the equipment being used by the burn-in process. So these three categories actually form the equipment space. Next, okay. The next big sector again in Penang is actually the precision components. We actually have a lot of SME in this space. So what this company does is, if you think about it, all these equipments are precise, have precise components within it. So who are the guys that actually manufacture all these very, very precise components that is used to be assembled into a machine? So it's actually supported by these precision components companies. There's a few listed in Malaysia, and also a big part of it actually SMEs or unlisted players. And going forward, if you look at Bursa Malaysia, a lot of companies within this space are going for listing. And this is actually the trend. You see more and more coming in for listing under this space. Next is metal fabrication. Again, quite dominated by SMEs in Penang. And what these fellas do is, see, precision are doing precision parts. Metal fabrication, you look at the whole equipment is actually metal body and metal frame. So metal fabrication guys are the one that actually fabricates the frame and the parts of the body of the equipment for the players. Again, this is also a trend we're going to see in Malaysia. A lot of these companies under this space will be going for listing. I think recently, if I'm not mistaken, the one that got listed in this space is Coraza. That's actually under this category. Under precision equipment recently was SFP, which is being listed quite recently. Okay. Now, what you see so far under this category is the semicon space value chain. Okay. Next to the semicon value chain is the EMS value chain, or we call it electronic manufacturing services value chain. Again, the public generally merge the other combined two, but actually, again, it is very, very different. Okay, now, this EMS value chain also starts with the product owner. Again, let's go back to Apple, for instance. Okay, now Apple got all the components they needed under the semicon value chain. Now, they need to take all these components to build it into your MacBook or your iPhone. So this is where the EMS value chain comes in. So EMS actually are the people who actually assemble the devices into the end product. Okay, so you will start again with the product owner, and then to the component owner, and then to the EMS players. So EMS players are guys who actually take all these various components and assemble into the device. So again, the world's largest EMS player is actually, of course, your Foxconn or Hong Hai Group. Malaysia, we got a lot of big players under this space also. I think so far in terms of revenue, the biggest is VS Industries, who actually assemble vacuum cleaners for Visor for Dyson, for instance. Across there, we got PIE, which is actually a subsidiary of Hong Hai. We actually have a Foxconn subsidiary here in Penang. It's actually PIE, Pan International Electronics, where they actually assemble things like your Nintendo, your Motorola walkie-talkies, your Broadcom, not Broadcom, sorry, your Datacom infrared scanners, etc. Okay. Next, we have precision components and materials, and this will actually to supply to the EMS. So again, this is very different. You have precision components that support the semicon industry. You also have precision players that support the EMS industries. So although they are both in precision space, but their end customers are very different. And therefore, the nature of business is very, very different. So although both are precision. And next, we also have the last one is actually the automation and inspection. Okay. So what these guys, if you think about it, in the EMS production line, involve a lot of automation. So what this place under automation does is they actually build the automation line for the EMS players to automate what previously was very labor intensive. They help to automate the whole process. So this is actually a very summarized view of what the whole book is about. It goes into the value chain. And in addition, the books also goes into, of course, I don't do it here, but every industry or every part of the value chain, we actually let you know what are the companies involved in this, especially the listed one, not the unlisted one. Next. So in the book, we also break down by segmentation. Okay, take QES for instance. It's one of the company under equipment. Okay, so generally we will say QES is the equipment player, but that is only half. I want to say half truth, half the fact of it. So what we did in the book is we actually give you a breakdown of where their revenue comes from. So take QES for instance. You'll notice on the revenue, there's equipment, there's materials, and then manufacturing. Okay, equipment means to say QES started off as a trading company, so they will actually import machines and distribute the machines locally. So if you look at this segmental number, you start to realize QS biggest contributor is actually distribution. Whereas in terms of creating their own machine, which is under manufacturing, is actually only a very small part of their business. So this segmentation is important because it lets you really understand whether is QES really an equipment manufacturer or is QES actually a machine trader. It's not to say good or bad, but just let you understand what the business is about. Next. Okay. One of the last most important slide or in the book is I like this a lot. Okay, if you look at what this chart does is actually it breaks down the whole value chain globally. Is look at it. The first is IDM, integrated design manufacturers. You have fabless, as I mentioned. Third is the foundry, which is creating the wafer. You have OSAT. You have electronic design automation, which are the machineries and equipments. You have materials, and you have materials which is non-wafer. Okay, these are the various category of part of the value chain. Okay, now you go by color, it actually shows which country by the country's exposure, which country has more exposure to each part of the value chain. You have blue, which represents US. You have green, which represents Taiwan. Europe is gray. China is red. Rest of the world is yellow. Okay. What is very telling in this world is you look at in terms of concentration of technology know-how. Among all this, the technology actually is with IDM, fabless, and automation. This is where the key technologies are. And you look at it, the blue bar is actually the most dominant in these three spaces, which is the US. The lesser high-tech, which is actually the manufacturing part of it, is dominated by the green color, which is Taiwan. That's why you have the foundry, which is manufacturing of the wafer, and also OSAT, manufacturing of the chips. So these are the manufacturing part of it. And you look at China, which is the red color. You find that actually China is not a very big player globally in terms of semiconductors. You don't really see much red all of it. So this actually explains that on one hand, although we think China is huge in semicon, but in reality, as I mentioned in the first slide or first few slides, the biggest players in China are actually non-US companies. That's number one. Number two, yes, we read a lot of news about China's technological capabilities per se. But if you really put things into perspective, they're still at quite. I'm not against China, don't get me wrong. I'm not pro-US, I'm not pro-China, but I'm just saying fact that it is. It's still at a very, very low end of it. Okay, now, this also ties into the latest CHIPS Act in the US. No, the government is actually putting 50 over billion incentive for CHIPS Act. Okay, what is actually CHIPS Act? In a very simple manner, if you notice, a lot of manufacturing are the green color. So what US is trying to do is to shift a big part of whatever that's in the green into blue. Okay, why they want to do this? There's actually two reasons. The first, of course, after the lockdown, when there's a logistic disruption, they realize that although US owns all the technology, but all the manufacturing is in this part of the world, in Asia. So whenever there's a logistic issue, you're dead because you're not able to get the source of chips that you want. So that's problem number one. Problem number two, of course, is China. Right? If China, the relationship between China and Taiwan is quite tense, and what if China one day was ready to take over Taiwan? And 70% of the world production are in Taiwan. So that will cause, again, a very big disruption. Third, technological issue. Part of the CHIPS Act is that US also restrict the number of high-end machines that can be used in China. Because they are also worried if all this machine goes to China, China will be able to replicate and build their own capabilities in the machine. So long and short, this actually put into perspective what actually this whole big thing about CHIPS Act is about. It's actually bringing whatever that is in the green to the blue.
Alright, it's the end of the sharing. If you like sharing like this, do check out the other Peter Lim sharing on his first book over here. We'll see you again on the next monthly book club sharing. Bye bye and happy learning!